Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The data presented by this Real Sector Committee report clearly indicates that for 10 years, India grew at an average of 10%, and consistently there was no year where we had anything below 5%. I mean, it was not a year, a decade of wide divergences. And this 8% is in contrast to, something like 7.2, 7.3 average in the first 4 years of the NDA government. So that definitely is something which the UPA has been quick to jump to as one of its big achievements. To speak more about this report, I have with me Monte Ahluwalia, the Deputy Chairman of the Planning Commission under the UPA regime. Mr. Ahluwalia, thank you very much for joining us. First up, would you say that this is, at least in the first 5 years, largely good luck because the entire world grew from 2003 to 2008?
Well, I've heard that argument, but actually it is true that the entire world grew. But, the acceleration of the world economy was much less than the acceleration of the Indian economy. And if you take the period of growth, when I last looked at the numbers, I mean, the world economy may have grown about 0.7 percentage points faster. The Indian economy grew more than 2.6 percentage points faster. Okay. So it was a period of global boom, but I think the Indian growth recovery was much beyond the global boom.
Okay. Well, we'll take our point. The first 5 years clearly were, excellent years of growth. But, the second half, the second set of 5 years from 2008-9 to 2013-14, while many of the years we have, something like 7% growth, it falls to about 5.5 in 2012-13 and in 2013-14 to 6.4% GDP. Do you think that the second 5-year term of the UPA was guilty of artificially boosting growth through higher fiscal deficits, higher bank lending, and not recognizing the writing on the wall that was coming to us from the global growth story?
No, I think, let me put it differently. There's no question that UPA 1 showed a growth rate of, I think, 8.9% or something like that. Okay?
Yes.
Against that, UPA 2, the growth rate was 7.4. Now, remember that UPA 2 was also the period when you had the Eurozone crisis. So just as we say that, the global boom helped a little bit in the earlier years, the Eurozone crisis would have had a negative effect in the second period. Okay?
Yes.
Even so, the growth rate in these new numbers in the second period, that is UPA 2,
yes,
is a growth rate of 7.4%.
Yes.
Now, I mean, the present regime, we don't have the numbers for the current year.
Yes.
But everybody has been using, even the official side, have been using numbers like 7.3%.
Yes.
If you end up with, say, 7.3% in the current year,
yep,
then the NDA government's record in 5 years will be 7.2. So in that sense, even UPA 2 will be better than NDA 2. The other thing,
I buy that average.
The last couple of years, remember, you said you forgot to mention, or rather you did mention, but you didn't highlight. The growth went down to 5.6, but then it started to recover. Now, the thing is, when you have a long boom, there's a tendency after a long boom to have a slowdown.
Yes.
And then the slowdown is usually used to correct some of the excesses that might have occurred during the boom.
Yes.
And some of this excess lending stuff, Raghuram Rajan had rung the bell in 2014.
Yes.
That there's a real problem.
Yes.
So I think if that had been corrected earlier, we would have had less difficulty now.
No, Mr. Ahluwalia, I take your point that, even after the dip in 2012-13, growth rate picks up in 13-14 and 14-15. I take your point on that. But just watch the other figures that have come from the real sector. And we didn't need the real sector report to tell us that. 2008-9, Fiscal deficit, okay, it's a bad year. It's a year of the great financial crisis. Fiscal deficit jumps from 2.5% in the previous year
but, you know,
to 6%.
I'm
So
aware
let me
of that.
finish. Let me finish. 6.5% the next year, 2009-10, not a crisis year. 4.8% in
by the way, what do you
2010-11,
mean?
not a
Just
crisis
hold on,
year.
hold on.
2011-12, 7%
just hold
GDP
on,
growth,
hold on.
5.9% fiscal
No.
deficit, not a crisis year. I mean, this is
Hold on.
unforgivably high deficits.
Hold on.
Yes,
Let's step back.
Yes, sir.
First, the deficit going up in 2008, 2009
Yes.
was a conscious reaction to the threat of a global recession. Okay? You can argue whether we should have done it or not done it. But believe me, at that time, when the whole world was teetering on the brink of a recession, when the heads of government of 20 countries had got together in October or something to create the G20 at the summit level,
Yes.
where everybody was saying we need fiscal stimulus and monetary stimulus, it would have been madness not to have a stimulus. So talking mindlessly about high deficit without recognizing that the high deficit is in response to a truly exceptional situation doesn't make sense. Now, secondly, you say the next year was not a crisis year. Listen, 2008, 2009, if you look at the global position, growth rate in 2008, 2009 was negative. I mean, when you get a crisis in September, Lehman Brothers collapses, the spread of contagion, the choking off of credit, the appreciation that you've got a serious problem, this took a couple of months. So the idea that 2009-10 was not a crisis, I don't buy that. It was a crisis. You can argue, legitimately I think,
Yes.
that maybe we should have tailed off the fiscal stimulus a little faster than we did.
But, on several years, the GVA is higher than the GDP, indicating that subsidies were very high and indirect tax collections were low. Now, that also is
by the way,
irresponsible, isn't it? Your
that was
GVA is
the
higher than the
fundamental
GDP in at least 3 or 4 years.
No, because let me explain. First of all, GVA is a real measure of production and income.
Yes.
GDP at market prices is a different concept altogether. So when you say subsidies, it is true, and this was really the problem of the fiscal deficit also. We didn't raise petroleum prices. Okay, I think I was saying at that time that we should. It's not easy to do. The political system in our country does not make it easy to raise petroleum prices.
I agree.
But as a result, we had a sort of a hidden deficit, which was met by issuing oil bonds.
Correct.
If you ask, since I recommended it then, I would certainly say now, we should have raised petroleum prices.
Yes.
But
Yes, you were
believe me,
handicapped.
given
you were
the-
handicapped by the
given
fact that the government depended on the CPM and on Mamta Banerjee's support, and she wouldn't allow you to raise. I take your point
I don't
on that.
want to point fingers at anyone because while some people are very loud, the truth is no politician wants to raise petroleum prices.
Okay. No, I
even the
accept that,
UPA,
and I accept that you all were very statesmanlike in your last year, and you all did raise prices.
Let me just finish.
I want. Yes.
We did start raising petroleum prices, which was a big change.
I agree.
so
I agree that it was very
mean-
statesmanlike in 2013-14 in the face of a general election to start raising prices. I give you credit for that. But now can you accept responsibility for something else? Because of this 4 or 5 years of continuous 6.6, 6%, 5.9, 4.8 fiscal deficit, you left the country behind with double-digit inflation continuously for 4 or 5 years. Is not that the UPA's fault?
Look, inflation definitely did become too high. And, if you, any government, when they look at a period, would look at what were the strengths and what were the weaknesses. And there's no question that inflation did become a problem. And part of the problem, frankly, is that our political class doesn't understand this. But, if you don't jack up petroleum prices, and you run a hidden fiscal deficit, all that happens is the general level of prices goes up.
Yes.
So we need a huge educational effort
Yes.
amongst the political class generally, I don't mean any one part,
Yes.
generally,
Yep.
there isn't good appreciation of that. And every government will find that difficult.
Yeah. No, well, to be fair, both the UPA and the NDA have accepted the MPC. It started off in the UPA regime and it got legislative form under the NDA. So perhaps the responsibility of low and stable inflation has been accepted. But I want to come to another point that probably allowed the UPA to enjoy or give the country a 10% growth in 2011-12 and generally 7.4% growth in your second term. That was also because of what is very clear now, reckless bank lending. Should not that also have been a responsibility of both Mint Street and the government?
Well, look, there's no question that, if you look at the history of any boom, a boom usually consists of a genuine upswing,
Yes.
then a somewhat exaggerated, irrational exuberance.
Yes.
Every fellow thinks that he can go and invest. Bankers also become a little loose,
Okay.
and they feel that whatever happens, you can lend and projects will work. And then you get a bit of hit on the head, things start slowing down and you have to make a correction. So, some of that is quite normal. In that sense, frankly, when we appointed Raghuram Rajan in 2013, I mean, he did a terrific job. I mean, he highlighted this issue. And by 2014, it was very clear that this was a problem. Now, I'm not blaming any one government or not, but, the truth of the matter is we're just talking about fixing some of these problems through the IBC, etc., which I think good initiatives.
Okay.
But, I think there's a lot of blame that you can throw around everywhere
Yes.
when it comes to the banking, the failure to handle the banking crisis.
What is good behavior in terms of numbers? Should we be very strict about
my
3 to
feeling
3.5
is,
fiscal
if we-
deficit, 5% inflation, 2%, 2.5% current account, and most importantly, not more than 14-15% credit growth? Is that how we should look at it? What would be your big numbers that future governments should watch out for?
Well, I mean, I'm not looking at these numbers on any daily basis, but definitely if you just kind of trigger broad thoughts, I would certainly say that we ought to be targeting 8% growth. I think that's something we can do.
Yes.
You can always say, why not 9? But I say, let's get to 8 first.
No, I don't want 9. I thought 9 was
and-
what created the mischief.
Well, we didn't. We targeted 9, but remember, give us credit. We targeted 9 at a time when for 3 years the economy grew at 9.5.
Yes.
But we recognize that this is an unsustainable boom. So right now, I would say, by the way, I don't know what the target is because we stopped having targets.
Yes.
There is no, to
We
my mind,
stopped
there
having
is
a
no-
planning commission. Yeah.
Well, I mean, the Niti Aayog could be doing it too, but
Yes.
they've said different things.
Yes.
At one stage, they talked about 8 to 10%. Then they said 8% plus. So I don't know what they're targeting, but we should be clear that the policies we're putting forth are based on certain targets. Now, as far as the current account deficit is concerned, my guess is that something a little above 2% is quite sustainable. We can finance it through long-term flows.
Yes.
For a very short time, if it went above 2%, maybe it can be financed. But anything more than that becomes a serious problem. And right now, it looks as if it's more than that.
Yes, it's heading towards 2.7 to 3.
Yeah, no,
you would
that's
consider that a
clearly-
danger.
That is clearly a problem.
Oh, right.
Now, I think, the simplistic approach is cut down expenditure.
Yeah.
And the danger with cut down expenditure is that you cut down things like health and education and all the rest of it.
Yeah.
And you won't cut down untargeted subsidies. I mean, look, today, for example, the total fertilizer subsidy, most agricultural economists will tell you that if you get rid of the fertilizer subsidy and convert it into investment in agriculture, the country will be hugely better off.
Okay.
But is there a single politician willing to say that in Parliament? No. There are huge problems with agriculture that we need to address.
Yes.
But, we keep talking about credit, but then what we do is loan waivers. Now, if you're going to do loan waivers, you're going to kill the credit culture.
Mr. Ahluwalia, the king of all home loan waivers happened in 2008, sir.
No, let me say, that was not the... I wasn't in favor of it, by the way. And
fair enough.
that doesn't matter. You're right, it happened then. But that's not the first loan waiver.
Yeah.
Unfortunately, every 5 or 6 years, we seem to have had them. Now, what is really bad in the present situation is, fortunately, the central government isn't announcing loan waivers.
Yes.
But the state governments are happily announcing loan waivers. Now, question is, can they afford to pay for it? No. If they're not going to pay for it, is the central government going to bail them out? If they are going to pay for it, what are they going to cut? So, frankly, I don't think these things are focused. I mean, no chief minister feels under any compulsion to answer this question. And I'm not referring to chief ministers of any one party.
Yes, sir.
In fact, the way the system is going, I'm sure most political advisors are advising chief ministers.
Yes.
They saw our loan waiver announced kar dijiye.
Okay.
And somehow or the other, it will be taken care of.
Yes.
Now, I tell you, if the rest of the world gets the impression that the states are going to drive us nuts, I mean, there'll be no credibility. The only test of fiscal credibility is if you let some states go bankrupt.
Oh, no.
In other words, if you don't bail them out.
Oh, right.
Mr. Ahluwalia, are we ready to do that?
Okay. No, well, I guess not. Mr. Ahluwalia, it was a pleasure speaking with you. Thank you very much for taking this call. It is very clear that great economists give much sounder advice when they are in the opposition and perhaps find their advice not taken when they give it when they are in power. Thank you very much, Mr. Ahluwalia, for joining us. Did the economy grow faster under the last UPA 2 government under Manmohan Singh than the current Modi government? A panel of economists and government officials called the Committee on Real Sector Statistics presented its report late last week, and it basically gave the back series of GDP figures as per the new base year, that is 2010-2011. According to this report, the average growth rate during UPA 1, 2003 to 2008, was 8.4%, and the average growth during UPA 2, that's 2009-2014, was 7.7%. Compared to this, the current NDA government, under which the average growth rate is 7.3%, definitely looks weak. The government has called this report experimental and non-official. And of course, even the link to the report is now gone from the MOSPI website. But what this data did show when that link was there was that high growth under UPA 2 government came at the cost of high fiscal deficit. Currently, the average fiscal deficit under the 4 years of the NDA government is at 3.7%. Under the UPA 2, the average fiscal deficit was 5.3%. Joining us to speak more about this report is the chairman of the committee which wrote this report, Professor Sudipto Mundle, Emeritus Professor at the National Institute of Public Policy and Finance. Professor Mundle, thank you very much indeed, sir, for joining us in this conversation. Well, first up, would you agree that these 10 years, 2003 to 2013-14, seems to be the golden period, all caveats notwithstanding?
Yeah, Latha, first let me set the perspective right. You know, when we were doing these, generating this back series, the last thing in our mind was to compare what journalists like to do, this, you know, the BJP, this NDA period versus UPA period and so on. We did not even look at all this.
Sure.
Our job was to connect two series of both prepared by MOSPI, CSO, but without a comparable back series, which was compromising any attempt at reasonable scientific analysis. So our job was to do a professional one of producing it, the back series, and it is a collateral thing that has now come out, and which is what everybody is focused on, about higher growth rate, and that, as you said, in the UPA 10 years rather than compared to the NDA period afterwards and so on. So that's it. And the numbers are what they are, and that's what they say.
No, I'm not imputing any political motives to your report, Professor. And I know, having been in previous finance commissions, that you remained just faithful to data and did what you were asked to do. I'm not imputing motives at all, sir. But I'm just asking you whether, that 10-year period of 8%, let's first break them into two periods of 5. The first half, 2003 to 2008, also coincides with a golden period of global growth. So do you think it was largely the global tailwind and not really much that India did right? Or if you wear your economist's hat, do you think that something was going right in India as well?
No, I think that two things happened, and now I'm purely speaking of memory because so far we're only looking at numbers and not at the underlying political background, I mean, sort of economic policy background and so on. But you're quite right, by that time, global growth had started, moving very fast. And together with that, you got some of the, the major effects of the reform which had been started way back in, 1991, having kicked in by then. And you did get a period of very high growth, which then ended with the crisis of 2008, which is also an external thing driven externally.
Okay. So with the benefit of hindsight, would you say that when global growth was not obliging after 2008, in fact, it was a huge drag, was it on hindsight a seminal mistake to have boosted the economy through fiscal deficits and perhaps even very easy monetary policy? I remember 2008, 2009, 2010, on a daily basis, the average reverse repo money that came to the Reserve Bank would be as high as 1 lakh crore, 2 lakh crore. Was it too loose monetary policy and too loose fiscal policy on hindsight?
Listen, first of all, in principle, not just in India, but all over the world, there was, as you know, monetary easing as well as fiscal stimulus in order to get the economy, of the global economy, I'm saying, to get it out of the worst, great recession since the depression of the 90s. So it was not an India-specific thing to do this fiscal stimulus or monetary easing. That being said, in the case of each country, it had to be calibrated based on its, very specific situation. And India actually bounced back fairly quickly, as did China, in fact, compared to a number of other advanced economies and other emerging market economies. As for the fine thing, I don't even remember what the numbers were of the exact, pace of expansion of, money supply and so on. It's a long time ago. So unless I look at those, I cannot be more specific than this.
Okay. No, my point is the general lesson that maybe the potential output in India is closer to 7%. I mean, I'm saying output, but I'm quoting a rate of growth of GDP. But currently, do you think aspiring to 10% would be actually a policy error? And probably we should have aspired to more like 7 to 8%.
In fact, I was discussing this with someone just this morning. I think our potential growth is around 7% plus, maybe 7.1% or something.
Okay.
And so a policy which aims to target that, to get there, would be the appropriate policy. One can only talk in terms of broad principles. We're not getting into actual numbers and things like that at this stage.
Would you also say that, the 4-5 years of double-digit inflation we had, starting from, I think, 2012-13, could be attributable to perhaps this artificially boosted growth? Artificial because it came on the back of high fiscal deficits.
Yeah, I think two things happened at that stage, Latha. If you recall, there was also imported inflation.
Yes.
Just as that big boost in growth came because of both domestic and external factors coming together, this high inflation period referring to was also a combination of both external and internal factors, where certainly loose macroeconomic policies contributed to it.
All right. We'll leave it at that, Professor Mundle. Thank you very much for joining us with your take.